And we are live. Everybody, welcome to the Wolfer Power Hour that we do daily on this YouTube channel and on Twitter. We're streaming live, YouTube and Twitter. Nobody does this. Well, actually, there's like one person I know in the market that does this daily. We have a special opportunity for you today. We are about to whip out the schlong, baby. And if you don't know what the schlong is, we were talking about it yesterday. It is a special strategy that I am in right now in trades. We're going to talk about Bitcoin. We're going to do analysis. We're going to talk market sentiments. I'm going to show you a trend, and I'm going to show you a pattern that has printed on the daily chart. And we have another special thing for you. There is an absolute line in the sand. This is the level of levels on Bitcoin that you need to be paying attention to. This is the absolute make or break. The thumbnail is no farce. It is the make or break. So with that being said, let's whip out the schlong on everybody today. Let's get into the Bitcoin charts. Let's talk about the trades that we've been taking. If you've been following the trades, dude, you're killing it because I'm killing it. We hit a $2,000 profit trade. We hit a almost $3,000 profit trade right before we got into the schlong, baby. And we got into the schlong today. We whipped the schlong out. I'm loving it. So with all that being said, anybody that is watching on Twitter, head over to the YouTube stream so that you can participate in the stream, okay? This is the whole point, is to be able to participate. It's really hard to comment on Twitter. I get that. I also don't have the Twitter pulled up. So if you comment on Twitter, I'm not seeing it. I can see the comments on YouTube, in my StreamYard, in my studio, all that good stuff. Head over to the YouTube stream. It is the link in the description. You just got to click on the video. Boom, it'll bring you right over here. It's very simple. Okay, so let's talk about these levels. Let's talk about the trades that we had going on. Let's look at some charts. Let's go over those previous trades, man. And if you think that this is good content and you're liking the content that we've been dropping, man, make sure you smash that like button. Share this around on Twitter. Share this video to the people that could have very easily taken $6,000 and made $3K on it, just like we just did, or taken $8,000 and made $2K on it, just like we just did this past few days, right? So share it around to the people that actually happen to give a F. Make sure you subscribe to the channel so that you know whenever I'm dropping these Nordic alpha bombs on people, and you can follow the trades if you so choose to. If not, just watch me. This is back testing at its finest, and it's not even back testing. It's back testing if you're watching the streams previously. If you're watching now, this is called forward testing, baby. You're going to see if my strategies and my trades are actually work because we're playing them out live every single friggin' day. Not very many people do this. I could probably name like 5 people in the market that are actually doing this. They're all legends, obviously, but not a lot of people are doing this. So with all that being said, if you want technical analysis on anything, I don't care if it's gold. I don't care if it's poo dick butt coin. I don't care whatever it is. I'll do the live technical analysis. Drop it in the comments section. Now, drop your requests first. Like the video. Obviously, subscribe to the channel. And then boom, bang on the notification bell. You know what time it is. So without further ado, we are going to get into the charts. But first, before we do that, we're going to talk about the previous trades where we've been making bank, baby. We've been bringing home that guap, that guacamoolah. All right, so I'm going to get right in here to my Bitget, which is where I've been trading at. And man, not much else needs to be said. All right, so let me go ahead and make a baby Drew. We need a baby Drew. We don't need a big Drew. We need a baby Drew. All right, baby Drew's in the bottom of the screen. We take this off. Bing, bang, boom. And guess what we're going to do too? We're going to get this thing all the way going. We're going to get this thing all the way lit, baby. Let's go. Let's go. Is Bitcoin going to pump or is it going to dump? I'm going to show you the level right here. If you see the level, it's probably already on the thumbnail and you might know what the level is, but I'm going to tell you why it's that level, baby. Let me know in the comments section if the music is too loud or if it is too, like, if it's down too much. If you want to get yeah, woo, throwing money around and stuff like that, feel free. Feel free, baby. We're jamming out. We're doing our thing. We're going to do it. We're going to do it. And I'm going to show you the trades. Let's get live. Let's get live. Bam. Oh, we got 2. Boom. 15 hundo. 4 hundo. 350. We got the schlong open, baby. If you don't know what the schlong is, I'm going to tell you what the schlong is. Tell me in the comment section. Larry says everything looks good. We're good. As long as you can hear me, we're good. We're going to vibe out. We're going to vibe out. We're going to make some trades. We're going to make some money, baby. So here's what we got. We got the schlong open. What's the schlong? It means you have a short and a long open at the same time. All right, I'm going to turn the music up just a little bit. Larry said he can't hear it that well. All right, give me a thumbs up if the music's good. Boom. All right. Why do we have this schlong open? Okay, because there's a key level that we are reaching right now, but I'm going to show you my trades first before we get into it, right? We got to go to our position history, baby. Bam. All right. We took a $234 profit on a ETH long, right? That was just like a couple of days ago. That was a quick little scalp. We put $1,000 on it, made almost $250, right? We put $15 or whatever. We made $15 on a $50 short on this SPX trade. That was great. What profits are profits, baby. We're going to take money either way. Then we made $1,900 on this Bitcoin long that you're seeing right here. This Bitcoin long made us $1,900. This very bottom one that you're seeing pop up on the screen. Bam. That's what we want to be seeing. That's what we want to be doing. Now, why does that matter? Because as soon as we took that $1,900 long profit, we went ahead and switched it straight to the short position. And if you've been watching the streams for long enough, you know exactly why. Then we came down and we locked in profits right here, $1,300 realized profits. Okay. That's gains. That's gains for days, baby. We got braids for days. We got gains for days. That's what we're going to keep doing. And we've got 1,500 of unrealized profits on this, but we went ahead and at the bottom, baby, we bought the bottom of this. At the bitty bottom and the tippy top, we took the short. That's why we're up, almost $3,000 on this trade if we decide to close it out. I'm keeping this short open for a reason. I'm going to tell you why that reason is whenever we get into the charts. But we did buy the bitty bottom on this at about $92,400. We bought right in this realm right here, 92.4, and bought it right on that wick. It was a perfect little trade. I was talking about the schlong yesterday. It's when you have a short and a long open at the same time. That's when you whip out the schlong, baby. Let's get it. That's exactly what we did today. Let's get to the charts. I want to show you exactly why we schlonged it, okay? So we shorted right up here at the tippy top, right? We rode it all the friggin' way down. Dude, we took it all the way down here to 99. I think it was like 99.8, which was this swing high right here. And I'll show you what that swing high is. Bam. That's where we took our first take profit on our short position, right? Then we took our second take profit on our short position just above this point of control, which was right here. We took it at 98.7. Why did we do that? Because we knew that was going to be a massive, massive resistance for us to go as support, but resistance for us to continue going downwards, right? So then we left the other side of the trade open. We took 33% of the trade off here in profit. And then we took another 33% off in profit here. Gains, baby. That's why we have $1,300 in realized profits locked in. Then we moved our stop loss up to under our break-even price. And now our stop loss is guaranteeing us that we still make money no matter what. I literally put the stop loss under $100,000, which is right here, which is where we took our first take profit, right? That's what you do. You trail that stop loss down, baby. There's a reason why you do this stuff. So as you can see, we're still guaranteed to make at least $300 on this. There's a reason why I moved my stop loss up to here just a little bit, and it's because I'm going to be entering more shorts and more longs, baby. All these little green lines, this is where I want to enter long positions to ride it up to the point of control. All these little red ones up here, this is where I want to enter more short positions, and this is where I'll be taking profits on my long positions. Okay, so we're gonna break down the schlong here in just a second. But that's essentially that trade. That's why we've got $3,000 in profits locked in right now, or $1,300 in profits locked in, and $1,500 more in unrealized gains locked in, as well as a $350 profitable long trade right here. Bing, bang, boom. So we're looking good. Okay. Now, this is the value area low of the range. Okay. And this is exactly why we took the long here. All right. We literally took the long under the value area low because we wicked below it, which was awesome. It was a great entry for us. That long is up, and we're probably starting to top out up here. Let's see what the RSI and the stochastics. Yep, look at that stochastic, baby. That mug is up to 99 almost. It could get to 100, and I mean, you're going to be seeing a nice little dip, right? But here's why we took the long here, because I thought, okay, we're going to probably bang up on support here. Bam, we're going to take this profitably up to maybe potentially 95,000. I actually have my sell order placed right up here at about 90, just under $97,000. Why? How sway? How sway? Why'd you put your stop loss there, Drew? Well, it's because that's where the 200 moving average is, and that's going to be your biggest dynamic resistance zone because you're under it. If price was above it, it would be a dynamic support zone. Now, secondarily, the market is favoring downside. Okay, that's just a fact. The market is favoring downside. You got the 100 getting ready to cross below the 200. The 50 is coming down here, and these are starting to curl up a little bit. But if we get below them again, they're all going to be going down. That's what's happening. So we're seeing the stochastic super high. We're seeing money flow in the red. VWAP's coming down on market cipher B to come for another crossover. You've got your momentum that's way, way, way down. Now, momentum is curling up. Okay. But so is price in the same realm. So this is actually kind of like a hidden bullish divergence, right? Which is another reason why we took this little short long here, because we saw a hidden bullish divergence here. And I'll show you exactly what I mean on market cipher, where the momentum was going up, right? It was trending upwards, right? But your price is trending downwards in the same realm. All right. So price is trending downwards. Let's see, where did that momentum start? Right here. And price is trending downwards. That's called a hidden bearish or bullish divergence. And that's why also we took this little quick long position. Now, here's my point. We got into this schlong for a reason. And it's because when you have positions built, like if you've got a short from the tippy top, hold on to that thing and then rebuy support at the bottom, right? So you sell resistance, you buy support, you ride it to the point of control at the least, you ride it to these dynamic moving averages, right? So my point is that we have a 0.2 Bitcoin long position. We have a 0.2 Bitcoin short position. Now, if we come up here, okay, and I'm going to pull up the BitGet chart so you can see exactly what I'm talking about. If we come all the way up here, we're going to be opening a short at 97,000, 98.4, and $100,000. And then that's where we want to be taking profits on our long position. Now, if we continue down even further, we're going to be opening longs at 91,605, 91,000, and 90,000. And then so here's the thing. When you're opening this, you're going to see both sides of the trade. So you're going to see your ability to profit both ways. All right. So although it's limiting your upside because you've got the same position open, what it's also limiting is your downside. So I know that if I break below a serious support level, which we're going to talk about in just a second, that serious support level is going to be right here at about $89,000, just shy of that, 88.5. So that's why on my longs, I want to stop out of my long here and I'll still be break even because guess what? Even though I stop out of my long at a loss, my shorts will still be profitable. And then we ride those all the friggin' way down here, right? All the friggin' way down here to these levels that we're going to talk about in just a second, actually. Let's just pull it up, man. I'm going to pull it up on the 1 day chart and you're going to see exactly what I'm talking about. And you're going to be like, damn, Daniel. Nobody can hear any music? Really? That's really weird. Let me see. Yeah, I mean, it's on OBS. It says that the music's on. So yeah, I don't know what to tell you. I mean, I'll turn it up a little bit, but yeah, let me know if you can't hear any music. There should be like some stuff going on in the background, and yeah, actually can't really hear the music. Boom. Okay, what music? Pax G. Can't hear any music. ICP. Okay, so we're looking at ICP. We got Billy Wiggle in the section, dude. I appreciate everybody that's showing up. Much love to everybody that's showing up for this. Let's go over here to the charts and let's see exactly what it is that Crazy Drew is talking about, why he's getting all hype on a Thursday. All right, let's take these FRVPs off. I'm going to show you exactly what I'm talking about. This is crazy, man. This is crazy. You're not going to like this, but no, it is what it is. Head and shoulders, baby. Head and shoulders. All right. We came down, we kissed the neckline. All right. Here's the problem. If you take this head and shoulders off, now we know where the neckline breaks, right? And we want to see this moving upwards. Okay. So that's kind of what I'm looking at. No music. Was the music ever going? Because it's going on mine. Let me see. Let me pull it up. Stream music. Boom. What about now? Do we have music? Do we have music? Let me know in the comments section. This is important stuff, man. We don't want people to be like bored on the stream, man. This is important stuff. We want to see if there's music on the stream. So let me know if there's music now. No music, 12:14. All right. While I'm waiting on you guys to tell me if there's music or not, it seemed like we had music at first, right? For some reason, we don't have it now. So let me see if my speaker, bam. All right, let me know if there's music now. Here, let's get to the end of the Head and Shoulders, all right? When we get into the Head and Shoulders, you're going to see exactly what we're talking about. We've got a neckline here. This neckline has been tested, all right? And now we've got these massive, massive 3 green candles or red candles going down. We got a red dot that printed on market cipher B, okay? That's the problem that we're seeing right here. If we see this getting banged on consistently, and what I mean by that is we're going to go to the 1 hour chart or the 4 hour chart, and I'm going to show you exactly what I'm talking about. This thing just keeps getting banged on, right? This resistance or this support level, support, banged on, support, it got kissed a little bit. It came within spitting distance of it. Same thing here, kind of kissed it. Then we got a hit here and we got a hit here, right? So the market sentiment is that this is going down, right? Market sentiment is that this is going down. And, that's that. There's not really much that I can say more than that. Now, can you catch a ride up here to about the 96K range, which is the first dynamic support that you're seeing on the 4 hour? Absolutely. This is going to be an absolutely interesting point. Now, why is this going to be your line in the sand, this $91,500 to $92,000 range? Whenever you're looking at the Head and Shoulders, that is your break point. So let me go ahead and let's see if we can restart the music and see if it works. Boom. Bam. All right. You guys let me know if there's music. If not, I'll figure out how to add it for the next stream. No big deal. Our Head and Shoulders is telling us that we're coming down here to about $74,000. But you know me, I only aim for about a 75% move on that. So we're looking at about 80 to 81K. That's where I see Bitcoin potentially going. We are trying to print a green dot on this candle on the 4 hour market cipher B. Are we actually going to print that? I don't know. We'll see. But, be that as it is, this is the absolute line in the sand. And there's a reason why this is the line in the sand, because everything is lining up down there for this to be the line in the sand, right? That's why. The FRVP, which is this, fixed range volume profile, if you pull it from where we went parabolic at about $80,000 all the way up to the high of this, you're seeing the line in the sand, which is what you saw on the thumbnail, being right here. If we do not hold this level, we break this neckline, it is over. Like, we are definitely going to $80,000 is my opinion. We're definitely going to about 84, which is right around here, 84, 85 range, which is kind of where we saw a little bit of pullbacks after we went parabolic right here from 80, 75K. We ran up. We got a little bit of a stall out right here, which is in the 84, 85K range. And then we moved up even further, right? So at the very least, this is going to be your first support level, right? And I'll actually pull up the support and resistance levels. As you can see, I've already got that bad boy marked out, right? So let's check it. Boom. This is our take profits and our support and resistance levels, right? So if we break this level right here, we're definitely coming down to this 84 region, 86 or so. And then if we break that region, we're definitely going to retest this right here, which is about 75% of the measured move on this Head and Shoulders pattern, which brings us down to about $80,000, right? That is not the greatest news that you're going to see for Bitcoin, okay? Now, what I also want to show you is that now that we know our line in the sand is right here in the $91,000 to $92,000 range, and we've got a little bit of support right here, maybe 89,000, which is why, if you look right over here, this is why my stop loss is set at 88.5, okay? Because it is right under this previous swing low, okay? This swing low is right here at about 88.7, right? Boom, you will see my stop loss under here for a reason on my long position. And that's because if we break under here, we know we're going down to $84,000. And I'll give you even another reason as to why we are going to potentially see that if we do break those lows. And I'm going to actually take all the indicators off so that it makes it a little bit easier for you to see here. This is what is called the VRVP, okay? And the VRVP is visible range volume profile. Now, what happens if we break here, right? Volume falls off and it takes you down to 89K. Why was I saying that 89K was kind of the line in the sand after that? And why I've got my stop loss down here, because that's where volume starts to pick up a little bit more so that you can have a little bit of buy pressure at about $88,000. But look at the volume whenever you go down here to the 80K range. Once you fall below $88,000, volume just falls off. And it's just like, it's almost like it doesn't exist anymore. Anybody that's on Twitter, come over to the YouTube stream. We're having a lot more fun over here. You can comment in the comments section and let me know if there's anything that you want me to look at. Now, first and foremost, Cheeky Fellow says, let's effing go. That's exactly what we're doing. What's my thoughts on BTC? You already know what time it is. We're going to look at ICP, and then we're looking at PAX G next for you, Chip Sanity, because you're an absolute legend, my friend, and I will not forget about you. All right, ICP. I actually think I did some analysis on this, so I should have a chart set up for this because I previously did the analysis on ICP. Yep, there it is. Okay, so, yep, this is where I was saying, okay, could we bounce here? If Bitcoin falls, we are not going to bounce here. I literally said that on the stream. This is your line in the sand. If you hit here and you go under this price whenever Bitcoin's falling, you do not want to be in a long position. All right. So we can say beyond any certainty or beyond any shadow of a doubt that that trade would not have played out. But guess what it did? If you would have flipped and entered short, it came down and almost exactly hit the level that we already had drawn. Okay. So now, do we catch a little bounce here? Yes. What's our next dynamic support zone or resistance zone? Right here, baby. It is called the 100 moving average on the 4-hour chart. And we're talking somewhere in the realm of $10.96, call it $11, right? If you come back up here and you bearishly retest this and get rejected, you're coming all the way down here to about $9.92. That would be a 10% ROI on that trade. And if you lose that, guess where you're going, baby? Right here to this previous swing low. We can chart that and give you the exact level. Bam, baby. We're going down to $8.81. If Bitcoin keeps going down, man, you want to know why I think we're getting this pump on Bitcoin? Does anybody really want to know? It's because the S&P is closed right now. And the only thing that's open in honor of our late president that died, that is why the S&P is closed. So we're observing that today. But the futures markets are still open. And that's why you're seeing Bitcoin kind of pump, because S&P has no ability to go down today. But if the S&P goes down, guess what happens to Bitcoin? It goes right down, baby. So you're going to see, in my opinion, $9.90 is your support. So if you want to buy here, hey, feel free to do it. I'm not telling you to do it. I'm not saying you should definitely buy by any means, but let's get this visible range. Actually, let's see what the VRVP is saying. Yeah, okay, so that's why we caught a little bounce here. There was a high volume node, but the next high volume node is all the way down here at $9.25. So if we lose this level right here, which is this swing low, right? And we can chart that as well. Where's that? Boom. If we lose this swing low at $10.36, dude, you're going down at least to $9.23. That's a pretty good risk to reward. You would then put your stop loss above probably this previous swing high right here, and I can actually give you the whatever. Let's see if we got the short position up. Boom. All right, so let's say we enter here. You put your stop loss just above this previous high, which is right over here. Boom, as you can see, right? And then you would be targeting all the way down to here. Your risk to reward would be 1.62%. I don't really like that risk to reward, man. I don't think there's a trade here unless you're going to keep your stop super, super tight and just put it right above this little area right here, which is where we bounced to, right? That's where I would put my stop. If I'm entering a trade on this, which I'm not going to, 2-to-1 risk to reward right here. My bias is you'll probably get a little bit of resistance right here at about $9.36. Gives you a 1-to-1 risk to reward. I don't think there's a trade on this right now. You do whatever the F you want to do. I'm not here to tell you what to do. I'm just here to read the charts for you and show you exactly what's going on. Now we're going to get to PAX G, baby. This is that gold. I love PAX G. All right, let's go to, do they have this on Coinbase? They do not. We're going to have to do it on the Kraken chart, even though I like to do the Coinbase charts. Woo! Okay, so this is going to be basically gold market analysis. Actually, I don't even think we really need to hit PAX G. If we do this, it mirrors gold. Okay, so let's go to XAU. Let's just look up gold. I know I have a chart for this already. It's on Capital.com. Yep, right here. This is gold. Okay, you're up at the top of this wedge, right? This wedge is favoring I mean, it is favoring a little bit of upside. You do have an MA pattern on the 1 hour, but you have broken above that. But, that doesn't mean anything. You can literally extend this MA up here, all the way up here. Boom. Bam. All right. So this is an MA pattern. And usually what happens is in an MA pattern, you form an M and then you have the A that comes back and retests the middle or the top of that M, right? And so that's kind of where we're at. We're right there, man. So could this come up, get rejected here, and then fall all the way down to about $2,628? You do have a pretty key level. And I'll show you where it's at right here. I need to get the VRVP off first. But you do have a key level right here, right? 2615. Why? Because we are seeing a macro uptrend, all right? And you can actually extend this uptrend a little bit up right here. Boom. Okay, so you're seeing a macro uptrend that's saying bing bong, we're going up, we're going up, we're going up. But we have reached the top of that channel, and we've reached the top of that channel at a key resistance point on this downward trending channel inside of this wedge pattern, okay? That could be problematic. So this is what's called a squeeze, man. This is where you're going to keep squeezing. It's squeezing the price into a small area, and there could be a big move. So my bias is that if we don't break above here, like almost immediately, and hit this previous swing high right here, then it's probably going to be a little bit of downward momentum for gold. Now, you have to keep the fundamentals of gold in mind whenever you're doing this. Is something I'm teaching everywhere else, right? But if you don't keep the fundamentals of gold in mind and what the US dollar is doing as it pertains to gold, like if the US dollar is strengthening, then gold is going to go down. If the US dollar is going down, then gold is going to strengthen. It is going to go up. So in good economies, gold is not going to be trending upwards. When the economy is good, you're going to see gold either capitulating or trending downwards. In a uncertain economy or something that is bad news, you're going to see gold trending upwards. Okay, now this is the 4-hour chart. Let's pull up the 1-hour chart and it'll show you a little bit better what that upward trending channel looks like. Bam. I mean, it's a beautiful upward trending channel, but we did get a massive rejection here. And now we're coming down here trying to retest the 50 moving average. We did bounce off of the 20 here. So that's exactly what you're going to see for PAXG. If you're trading PAXG, that's exactly what you're going to be seeing because it's going to be mirroring gold. All right. So whenever I go to PAXG, as you can see, it's going to, for the most part, mirror gold. And, we don't necessarily see the exact same stuff happening with PAXG because I think it kind of lags behind gold because it is a 24/7 market. But let's be real. What we do still see is this downward trending line here, right? Boom. And then we see this upward trending line here, right? With an inflection point coming soon. An inflection point coming soon, right? So that inflection point, in my opinion, is going to be met by probably Thursday or Friday, okay? And what I mean by that is let's extend this out just a little bit further. Boom. Okay, so we're seeing an inflection point where gold has to make a decision by the 22nd of January, but my bias is that it never really gets all the way over here. It's probably going to be somewhere in the middle of the month. Probably you got 5 days to figure all this stuff out, right? Now, what are your supports if you go down, right? Your first support is going to be right here. Okay, then your upward resistances are going to be probably right here. Let's zoom in a little bit. Your upward resistance is going to be right here, okay? Let's just do a ray tool. That'll be boom and bam. That's going to be your upward resistances, okay? So if gold can break out of this little triangle, right? Because this is actually it's a pretty friggin' symmetrical triangle, right? Like it's not like super, it's not like downward trending or upward trending. It's really like symmetrical. So, you're just kind of coiling up in here. This is what's called a squeeze. Okay. So what I'm seeing on PAXG is probably we could actually take this out and we can say, this is your channel, right? Boom. And then bam. So my bias is that there's not a trade here. Okay. There's not a trade here. There's a trade here. and there's a trade here, right? And there's definitely a trade here, and there's definitely a trade here. Okay, so this is where you would be thinking about, do I go short, right? This is where you definitely think about, do I go long, right? And right up here, you could say, okay, do I front run this move down? And then do I go short here and place my stop loss above this previous swing high? And same thing here. Do I go long here and place my stop loss just below this swing low? I don't know if I would necessarily do that because, you know, you do see this massive sell-off in PAX-G that you definitely did not see on the gold charts. So PAX-G seems to be a lot more volatile than actual XAU-USD. And that's that, you know. What is my setting on VRVP? Thank you for the comment. I appreciate that. Let's go ahead and I'll show you. Boom. All right. So my inputs, I want 240 rows. Okay. I want my volume to be up and down. I want my number of rows to be right here, 240, right? So don't do ticks per row, do number of rows. Your value area is 70. All right. Then you've got your style. I put my upward volume on pink or purple. And then I put my downward volume on yellow, okay? So same thing with value area upward and value area lowered. I do that. And then I have my opacity at about 50% on each of these, right? So that it doesn't like take up the entire screen. And then I have my placement on the right, okay? And then if you want it to be, you know, 30% of your box width, you can put 20% and it'll make it smaller. Like as you can see, if I want to put it at 100%, look what it does. Boom, huge, right? 25 to 30% is good. Right, it'll give you everything you need to know. I've found that the sweet spot is about 30, and then I have value area high, value area low, point of control all turned on. If you really want to, what I would suggest doing is turn your value area low and your value area high to this, right, and then turn your point of control to a yellow. All right, and then that's it. Labels on price scale, values in status line, no developing point of control, no developing VA, right, and that's that. That's your settings, man. It's a beautiful little indicator. It's a beautiful little setup. It'll give you everything that you need to know. And if you know anything about visible range volume profiles, we literally are tagging the point of control right now, right? We just tagged it just a minute ago, if you can see, right? And actually, this was like quite a few hours ago on PAX-G, and it got rejected off of it at a massive, and we are sitting at a massive high volume node right here, okay? So that's my bias, man. My bias is you're probably looking more towards downside than you are upside, especially considering if, now, here's the other thing. If the S&P, which is this right here, S&P index, SPY, SPX, if this, let's see, where's CBOE? I think this is the one where I have all my charting stuff on it. That is not it. I got to find SPX. I must not have my chart. I got to figure out where my chart is on SPX. I feel like it's on CBOE. That's where it would be. But in any case, your boy always has your back. So what we can do is we can literally just pull up my SPY chart. Boom. Easy. Easy peasy lemon squeezy. Let's get into the SPY chart and I'll show you exactly what I'm talking about. When the S&P is going up, you're going to see like gold going down majority of the time, right? So if the S&P starts trending up, you're going to see gold hit a downward trajectory, and you're going to see gold hit an upward trajectory when S&P is going down. Now, I'm favoring, and so are the charts. The charts are favoring bearish bias on this. Okay, now, is there a potential WV pattern forming here for a potential move upwards? Yes, there is. But this is something that you absolutely would want to pay attention to. Boom, bam, chart it. I don't like this WV, actually. I really don't like it. It's too big. It's not really a good WV. It's trending downwards, too. I don't like it. Yep. No, screw that WV. Just kidding. Here's what you really need to look at on the S&P. And the reason why we're looking at the S&P is because it's going to determine what other markets do. Okay, so look at the parallel channel. Look at the parallel channel. Look at the baby. Look at the baby. If you know what, if you've ever watched Old School, funny movie. Boom. Look at the baby. Look at the baby. Bam. You're seeing a downward trending channel. Now, do downward trending channels usually break down? No, they usually break up. But you can stay in this channel for a really long time, especially on an asset like the S&P. At least down until you get down here to the 5,700 level, and then you might favor a bounce, right? Why the 5,700 level, Drew? Because this is where our previous swing low was. Because guess what? Our previous swing low, we took it out 2 times, right? and we've got lower low, lower low. We have a higher low here, but if we fall, that's going to give us a third lower low in a row. Okay, so think about that whenever you are looking at Bitcoin, when you're looking at gold, when you're looking at all of these other different charts, make sure that you're looking at that. Okay, and if you want these trades that I was talking about here, dude, like let's go back and let's talk about the trades from yesterday that I was talking about. Like, because now I'm in those trades, I'm in those exact trades. All right, so here we go. Bing, bang, boom. BTC. Give it to me. Bam. All right. So let's look at BTC. I'm going to take the visible range volume profile off because we know what our key levels are. We know what our line in the sand is. If you don't know what it is, then rewind the track, baby. DJ, rewind that track and let them know what the key level is and where that line in the sand, that little break point is, right at 91.7. You're welcome for giving it to you a second time. Now, what we're going to look at on Bitcoin is also these Fibonacci's, okay? Because Fibonacci's rule the world, just like numbers, because Fibonacci's are literally just numbers, okay? Guess what the Fibonacci did? It almost came down and hit the zero line, and it front ran the 50 moving average on the 1 hour chart and the 0.236 fib level. That is not good news. If you can't come up and at least test this level, it's showing massive, massive downward strength, okay? Massive, massive selling pressure, in my opinion. You can have your own opinion, but you're here to hear mine. So that's what I'm going to give it to you, right? We got the 50 moving average right here. This is a dynamic resistance, and it's looking like we've already lost the 20 again. The 20 is a magnet. Remember, the 20 is a magnet. Look at the 20. Bam, magnet. We fell, bam, magnet. We fell, bam, magnet. We fell, bam, magnet. We're going to fall again, bam, magnet, right? We're going to go right back up to the 20. We're going to get rejected. 50 is going to continue curling downwards. Now, here's my point, okay? Even if we check a different fib, right? We still didn't get up to it. That was the fib from the all-time high all the way to the all-time low, right? This is the all-time high to the the range low. That's that fib, right? But let's look at the one from this previous low right here that we just set to this high, this swing high, right? Because that is relevant, Drew. Don't glaze over it, baby. We came down and we smacked the zero line on that, right? Let's see if we reset our fib. Did it hit it? Dude, we hit it and bearishly retested it. Not awesome. Okay, so I'm favoring downside here, man. I'm favoring downside. That's just that. It is what it is. You can be happy, mad, however you want about it. Yeah, actually, I do have some trainings for people who want to learn TA. So we're bringing out a bunch of free stuff right now. If anybody is, wants to, hear about that, I'll let you know whenever it comes out. So like I've told people, I'm going to do a free course for people that just want to get started trading. Basically what it's going to be is this is exactly what you need to get started trading with no money, right? Or with, at $30 a month, right? If you've got $500, you want to get involved in trading, you want to follow my trade, stuff like that. I'm going to show you exactly how to do that. And I'm not going to charge anybody anything for it. I'm not trying to make money off it. I'm just want to help people, figure out how to get into these markets and be able to take actionable steps whenever they're watching stuff like what I'm doing, right? Like if you want to follow my trades, you can't do that if you don't have TradingView. And at the very least, if you don't have a brokerage account with, at least like $500 or a couple $100 in it or whatever. So feel free to do that whenever I start bringing that out. I will let everybody know and we'll tell you where to go and get it and access it and stuff like that. But if you want the trades that I'm doing right now, I want you to do this. All right. I want you to send "Give me the trade" to info@drewwolfer.com, and I will email you that trade. Give me the trade, baby. That's all you got to do is email that email, and I will send you back an email with these trade setups of what I'm talking about right here. Because if you saw the trades that I was talking about earlier, we posted all those, and these are our previous trades where we took massive gains. We longed here. We took gains here. We shorted up here. We're still in that trade for massive gains. We longed here, and we're going to try and write it up. And we also are still in that short, right? So those are our previous trades where we actually took, right? Here are our potential trades that we were talking about yesterday, right? These were actually pretty wild. And if you look, this is what I'm talking about, right? This was the inflection point, and I was like, look, you might enter here, right? And then place your stop loss below this kind of key critical level of support, right? We entered here and our target is about, what was it? I think it was like $97,000, $98,000. This target has now moved down because the moving averages are curling down. The 100 is about to curl under the 200, right? So now our target is right around 96,989. And honestly, I'm cool with taking profits here at the 50 moving average at $95,000. So this is what we're targeting, but this is what we'll take, right? And I actually moved my stop loss way down here. Why? Because I have a short trade that's still open. Then I said, look, you could also schlong this bad boy if you really wanted to and take the same entry here for the same amount of money and same amount of Bitcoin on the same leverage, whatever it is. And you could take that same short position. And then guess what? If we break this level, you stop out on this trade and then you ride this all the way down here. And then if we break this level, right, you stop out on your short trade and you ride it all the way up here. So it's like non-directional trading is a really good way to make money. That way you don't have to sit there and hawk the charts and be like, look, I'm 100% saying this is going down. I'm 100% saying this is going up. You don't have to do that, man. That's called a straddle, okay? If you know anything about the options market, you know what a straddle is. So we actually took this trade. We're in this trade right now. You can see it right here. It's very simple. I don't know why. Yeah, there we go. Okay. Yeah, big, it wasn't working for it. We're in this trade right now. Now, is it working with us? No, it's not. Like, I mean, yeah, it's up $200, whatever. But because we have our downside covered on this trade, even if it moves against us, we still make money. All right. Because we're going to make money on this side of the trade when this bad boy, if or when this bad boy stops out. Same thing here. If this bad boy stops out because it moves up, guess what? We make a bunch of money on this trade and we ride it up to those value area highs or those next resistance levels where we're wanting to take profits. Okay. So this is why all of this stuff matters. So if you want these potential trades right here, let me know. Bam, bam. Give me the trade. info@drewwolfer.com. Boom. Just send it over. I'll send you a screenshot of the trades. I'll send you the setup. You'll see the stop losses. And that's the schlong, baby. We whipped out the schlong for everybody today. And I'm actually really happy with my position. Honestly, earlier I was like, damn, Daniel, we just took out the 9. I want to, the 9 moving average. I want to take profits here. I didn't take profits here because I stuck to my plan, right? I'm still going to enter longs here, right? And as you can see, my long almost got hit here. Like that's, like we're so, like, this is why technical analysis is so awesome. Because, dude, when we pick out these levels, dude, it's for a reason. I had my buddy Greg, he called me earlier and he was like, yo, I got like $500 on Blowfin. I want to take 150x leverage long trade. And I was like, don't do that. Do not do that. Take like a 50x leverage. If this is a lotto ticket for you, take a 50x leverage trade, but don't just go in here, right? You need to layer your orders in. So I gave him all of these 4 orders over the phone and he put 4 different orders in. And then if we do catch a bounce here to the 100 moving average on the 4-hour chart, or even the 50 moving average on the 1-hour chart, you're taking gains all the way up to $95,000. And then guess what you do at this level? You flip it. You come right down here and you press one friggin' button, man. Reverse, reverse, reverse. And then you take it and you write it down for gains, right? So we know what our range is. We know what our potential trades are. Here's our range right here, just in case you happen to give a F, right? We're going to give it to you again because repetition is what gets people to know what they're talking about, right? So whenever we're looking at this range right here, which has been very well respected, we break above it, we come right back into it. We break below it, we come right back into it. We break above it, we come right back into it. We wicked below it, we came immediately back into it. We broke above it over here, bam, right back down, right? So my point is that there's a reason to be in a schlong right here, because guess what? We shorted at the tippy top and we're still in that short. And so we long the bottom for resistance and we see how far up we can ride that bad boy. Once momentum starts to fall off up here and you start to see bearish divergences and things of that sort, that's when you start thinking, I'm going to take my profits here, or I'm going to flip and I'm going to take and make my short position just a little bit bigger, right? So that's essentially what we're seeing on these charts right now. And whenever you're looking at these levels right here, right? And this key level of support that has been very, very well respected this entire way. And then what you're also seeing on it is a friggin' head and shoulders pattern on the 4-hour chart that I'm about to pop up right in your face right now. It's pointing to downside, my friend. It's pointing to downside. And if anybody wants to know why I took the short up here and front ran the head and shoulders pattern, I'm going to tell you and show you exactly why I did that in a dedicated video that's going to come out on my channel next week, because there's a very specific, and if you were on the stream for this, dude, kudos to you, my friend, because you took some big gains on that trade and you're probably still in gains because I am, right? So if you front ran this head and shoulders, and again, there's only one reason to front run a friggin' charting pattern. And it's if you've got like 3 other confirmations up here. We had a bearish divergence up here. We were outside of the value area high. We were hitting up against this swing high that's right over here, right? And we're getting rejected from it. And then we had some very bearish consolidation whenever that was happening, right? Plus, what we had was a cup and handy right there. Cup and handy, baby. And we rode it all the way up to almost the 75% level of that move. And then bam, we dumped. That's why we front ran that head and shoulders pattern. There are very, very specific rules to a head and shoulders pattern. What's the first rule, Drew? Well, the left shoulder needs to be about halfway to 3/4 of the way up to where the head is. When the head prints, it needs to go all the way back down to the neckline that was established by the left shoulder. Then the right shoulder can be higher or relatively close to what the left shoulder looked like, but they need to be pretty friggin' congruent with each other, and it needs to look like a friggin' head with 2 shoulders, okay? On a head and shoulders, it needs to be angled up, okay? Because if it is angled down, that could potentially nullify the pattern. The reason why we want it to be angled up is because that's showing an uptrend. And what do we know about uptrends and upward trending channels? They tend to break down. So if you're in a downward trending channel, you don't want to see a head and shoulders forming because it could break up. So that's why we do the head and shoulders the way that we do the head and shoulders. Now, secondarily, here's the other rule. When you see the neckline get retested, right? You do not enter until the neckline has been broken, unless some wild ass stuff like what happened up here happened and it all lines up to say, yo, you should be in a short, right? And that's exactly why we took that trade and why we're up about $3,000 in gains on a $6,000 trade. We're still in that trade right now. And that trade is what afforded us the ability to whip out our schlong today, right? So that's exactly what we're doing. We're schlonging it. Now, secondarily, you can measure this move. The way that you measure this move is you take the top of the head all the way down to the neckline. It's very simple. Copy and paste it over to where the break of the neckline is going to be. It gives you your target. The target takes you all the way down to 74K, which, as we all know very well, is a massive, massive level of support that has been established. Bam, right here from this previous swing high. And guess what else? From the previous all-time high, all the friggin' way over here, and it has been bam, 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 bam. Very well respected. And that right here, if you look, is called an SR flip. Boom. Support to resistance flip. This used to be resistance, and bam. Now we flipped that resistance to support, back tested it, boom, blasted up. And now we're going to come back down and hopefully bullishly retest this support, or at the very least, bullishly retest this little consolidation range on our way up to $108,000. We kind of stalled out here. As you can see, there's a little consolidation range. That is an area of liquidity that has yet to be tapped. And guess what the market chases? Liquidity and stop losses. So with all that said, we are targeting that $80,000 range because that is about 75% of this wick. You don't want to try and take this all the way down here for gains, man. You can, but like very rarely do these moves play out all the way, exactly all the way up, because guess what? Everyone knows what a head and shoulders is. And if you know what the rules are on a head and shoulders, you're going to get front ran at this level and it's never going to hit because everybody's going to be taking their profits here, man. So take your profits at about 60 to 70% of the move, somewhere in this 80K range. And then boom, we're longing, right? Which is exactly what I'm trying to do. And which is exactly why I kept this short open. Now, I want to tell you what happens and how you confirm that the head and shoulders has been broken. Okay. So here's exactly what you do. This is the neckline, right? What you want to see is whenever we come down and price comes down here, and we might be doing it, once we get a candle that closes below this neckline, which is right at $91,400, if we get a candle that closes on the hourly chart, on the daily chart, on the 4-hour chart, the hourly chart is going to be the least receptive to this move playing out. The 4-hour chart is going to be more receptive, and the daily chart is going to be definitely the chart that you would want to see this move playing out on. So when you're looking for your confirmation candles, look for them on multiple time frames, because the hourly chart has a less likely ability to play out on a charting pattern than the daily chart does. That's a much stronger indicator and a much stronger pattern if it's printing on the daily chart, okay? Secondarily, a move only plays out in the time frame that you're looking at, right? So if you're looking at a head and shoulders pattern on a 1-hour chart, that move's going to play out over hours or maybe a couple of days, right? Whereas if you're on the 4-hour chart, that move is going to play out over days. And if you're on the daily chart, that move is going to play out over potentially weeks, right? And if you're looking at the weekly chart, it's going to play out over months. And if you're looking at the monthly chart, it's going to play out over length of quarters, right? Potentially a year. So understand that when you're charting this. Now, if we get a candle that closes, a candle close under this level right here, what do we need to see? Another candle that closes below the close of the candle that broke under this neckline, okay? Does it have to be the next candle, Drew? No, it does not. So long as no candle closes back above this level, as long as it stays either at or below this level and does not close another candle above this level, this move is still confirmed, right? Then any candle, subsequent candle afterwards, so long as we haven't come back above the level and on a candle close, okay, we can wick above the level. Nobody cares about wicks. And then another candle closes below the close of the candle that broke the pattern and broke the neckline. Then what you would want to see is a bearish retest of this neckline. That's where you would enter for a move down. And you would place your stop loss either above here, which is above the value area low and the neckline, or you would place your stop loss just above this swing high right here that we just bearishly retested on the 20 moving average on the hourly chart. So that's exactly how a head and shoulders plays out. That's exactly how I would see it playing out. And if you want to get into that trade, I'll show you exactly what it would take in order for you to get into that trade. Even though you know how to enter, I'm going to show you what the position looks like now. So we would enter here, right? Oops, that's the long position. I need to go to the short position. That's my bad. Bam. We enter the short position here. We place our stop loss just above this swing high, right? And then we target a 60 to 75% move downward. What does that give you in terms of risk to reward ratio, my friend? 3x risk to reward. That means for every dollar that you risk up here, say you got $1,000 on this trade and you stand to lose $300 on this trade. Guess what you're going to make? $900. Okay. Now, however you set that up is on you. If you want to trade leverage, if you want to not trade leverage, I don't care. That's on you. I trade 10x leverage on Bitcoin because I have my pulse on the market, right? I'm watching this every day. If I'm trading something I'm not as confident on or that has more volatile swings, I know, right? Like, think about that. Something with more volatile swings than Bitcoin. Well, that's what altcoins are, right? Well, I'm only going to trade 2 to 3x leverage on an altcoin, or maybe I don't trade any leverage at all and I just go straight spot. So that's my point. So here's my plan. Once we get down to this level right here, I'm going to be buying altcoins, right? And I'll probably put in like maybe anywhere from 30 to 40% of what I'm willing to buy on altcoins right here. And then guess what I'm going to do? I'm going to buy the rest of my altcoins if we revisit this 74K range, okay? And then if we dump below this range, I hate to break it to you, the bull run's over, okay? That's the line in the sand. If we break below that range and we confirm a candle under it and then we bearishly retest it, the run's over. Do I think the run's over? Not even close, man. Not even close. What do I think is actually going to happen? Here's my prediction on Bitcoin. And if you've been watching the streams for long enough, you know what my prediction is. But in any case, we're going to give it to you. We do have a massive cup and handle that has printed on the daily chart. And I'm going to pull that up and I'm going to take everything else off of here So let's see what that cup in handy says, baby. All right, let's pull all this off. Let's pull this off. Actually, let's leave this support on. Okay. All right, so the cup in handy. Where does that take us? Where's my cup in handy? For some reason, my cup and handle isn't popping up. Oh, that's my other cup and handle. That's my bad. That's my bad. Where's the big cup and handle on the daily chart? I don't know where it is. I know I have it on my other Bitcoin chart. Let me pull that up. It'll take me about 2 seconds. Bam, let's get it, baby. All right, so here's the cup and handle on the daily chart, right? This is what we want to see. So here's kind of my prediction on this. Get all this other stuff off. Boom, daily chart, and bam. Okay, zoom out a little bit. We got to zoom out really friggin' far for this, okay? So just bear with me. Bear with me. All right, here we go. This is the cup in handy on the daily chart. Where's that? Where's that? I got so much stuff on this chart. Boom, baby. We got the cup in handy on the daily chart. All right, so we have confirmed a breakout on this. We've never actually come back down and retested this cup and handle, right? We broke out and then we just kept going up. We never even came back and bullishly retested it. So this is a massive cup and handle that leads all the way back to the all-time high of 2021 or 2021, my bad. And leads up to the new all-time high that we set in 2024, right? Now, if you look at this, you can see it's very clear cup and handle. This is our measured move, right? Now, if you look, we did hit about a 75% trace on this cup and handle. So does that mean that this run is over? No, not necessarily. And I'm going to show you why. Because what I think is going to happen is this, right? I think that the move on this cup and handle played out. Okay. I truly think that move played out. We're going to extend this out just so that we can get through it. Bam. Okay. Now, here's the point. We have lost the 50 moving average on the daily chart. We're probably going to be trending down here more towards the 100. And by the time we get to this 80K level, this 200 will probably be up here above. It's already going to be above 74, 75K. So my point is that if we lose 74, 75K, especially when the 200 moving average on the daily chart is at that level and we fall below it, that's incredibly bearish. We're probably, the run is over. Bull run's over, right? So I don't think we're going to get that. I think what we're going to see is this. We're going to see a break of this line right here. We're going to see that head and shoulders play out. We're going to see a catch point right about 80K. And then we're going to move up here towards, give me 1 second, 120. And then eventually come back here, retest the all-time high, and then probably come up here more towards 130 to 150 range. Actually, let me give me 1 second. We come back down here. We retest it. We head up to about, I believe it's like 144, somewhere in that realm. Now, why do I think that? Okay, so we know what we're looking at in terms of the cup and handle, right? I think that move played out already. And I'm actually going to move this horizontal line into the cup and handle pattern because I think that's already played out. What I want to show you now is what's called a Fibonacci retracement, okay? So if we look at the Fibonacci retracements from 2017, we've already played that entire move out right here. And guess where the support is at? 87K. Okay. If we fall below that, that's fine. So long as we catch at 80K. But guess where the other support is? 75 friggin' K, man. And that's where that level had been very, very well respected here, right? What did that Fibonacci level come from? I'll show you. This is incredibly valuable stuff. And you're getting this free. So, no charge, right? We took the low of from 2015 to the high of 2017. That's the bull run. To the low after the 2017 bull run. And it gave us our predictions of where Bitcoin could go, right? We completed that full extension, right? But here's the good news for everybody that's like, damn, we already completed the extension. We need more, man. Here's the good news. If you take that same exact type of extension and you pull it from the low after the 2017 bull run to the high of this past bull run in 2021, and then to the low after that 2021 bull run, guess where it's putting us? 120, baby, which is exactly what I was saying I wanted to target is the 120 range, which is the 1.618 fib. Then I would be targeting the 150 range, and I think Bitcoin tops out somewhere in this realm, 180 to 190, is most likely what's going to happen. I think the highest it could probably get is probably 230. Why do I think that? Look at the previous cycle, 2017. Where did we top out? Just under that 2.618 fib, or that 3.618 fib. We topped out just under it, right? And this could be that first kind of like top, right? And then we move a little bit further up. So my point is that we could see it move up to just shy of this 3.618 fib. And the good news for everybody is if that happens, we're looking at a 220 Bitcoin, okay? I truly think that we're going to top out somewhere in the 180 realm, and we could see a top out somewhere below 150, but I don't think that this run is over so long as we hold this 80K level, and the last line in the sand is going to be your 74K level. Let's see how our trades are playing out, because it looks like Bitcoin's falling. Yep. So we're only $44 in profit right now, but what we're seeing on the hourly chart is that massive rejection. I might actually close this and take my longs away now on my BitGet chart, because I don't think that I really want to be in that trade if it's going to move down, right? So we could have taken that long for gains. It's no big deal that we didn't. I don't care. Not a big deal for me. All right, delete. Because guess what it did? It also protected the downside on our short trade, right? And it helped us lock in those profits. So if we look at the hourly chart, we see a clear downward trending channel, right? We could actually see almost like a wedge pattern. If you want to look at it, boom, we've got downward trending channel. And then you kind of see a wedge pattern right here. Boom. So there's your line in the sand, man. I think Bitcoin has further downside. Here's why. We came up, we bearishly retested, or we reclaimed the 20 moving average, and then immediately came back down, retested this zone yet again, right? So my guess is my buddy Greggy that asked me to give him the trades earlier, he probably got his fills here for a long, and at the most, I would be targeting $95,000 right now. This right here is hope, right? You can hope to get above 90, to get to 97 if you're longing here. But my bias would be I would take profits at the 95K level, which is exactly where I will probably be taking profits. Now that I know that, I'm going to move this down to 94,898 instead of 96,898. Okay. Boom. So 95K level, we would lock in $900 profit, and then we would flip short. Boom, you're seeing me take these trades live and update my levels live, and that's that. And we're going to stay in this short position that we see right here until it tells us not to be, okay? As it sits right now, the 100 is coming down. It's about to cross the 200 below it. That is a 100%. Once that happens, once this red line comes down below this green line, right? That is the most bearish pattern you can have on moving averages. The 100, the 200 being the top, then the 100 being here under the 200, then the 50 being under the 100, and the 20 being under the 50, and the 9 being under the 20. That's kind of what I'm seeing. We could come back up here and retest the 20 at about 93.8 if we don't wick through it all the way up to this this 50, then we're probably going to get rejected, and I think we're going to start falling through this pretty quickly, in my opinion, especially all eyes on the jobs data that's coming out tomorrow. And then obviously all eyes on the S&P. Where does it open tomorrow? That's what you need to be watching for. These levels, rewind the track, watch the stream if you don't remember the levels. If you want the trade, you already know what to do. Give me the trade, baby. info@drewwolfer.com. Send me an email. And watch that S&P open tomorrow, and watch that jobs data tomorrow, because that's going to determine where we're going. And that is exactly why your old pal Drew is in a schlong, baby. That's why he got the schlong. He whipped the schlong out today. So keep your mind out of the gutter. Understand that schlong means short and long at the same time. And I will see you in the next stream. If you like content like this, make sure you smash the like button. Anybody that's on Twitter, make sure you head over to YouTube so that you can participate in the stream. We got a lot of comments on it. We got over 24 people in here. I don't know which ones are on YouTube. I don't know which ones are on Twitter. But one thing I can tell you is it's much more fun on YouTube. So come over to DrewTube, subscribe to the channel. Boom! Bang on the notification bell. Come over here, take some gains. If you don't want to trade real money, trade with me on a paper account. Fact check me. I do all this live. There is no like, oh, hey, I did this last week. Nope. It's all videoed, it's all live, it's all, transparent, and that's that. So with that being said, if you want to trade with me, go ahead and trade. If you want to do it on a paper account, do it on a paper account. Start learning stuff. And with that being said, comment anything that you want to see from me in the relevant sections. I'll let you know whenever I'm bringing out my free course and all of my free materials, but just know that all those free materials are on this channel right now. So make sure you show up to the streams every single day, and I will see you in the next stream. And I promise I will try to get the music working for the next stream, because I've been listening to techno this entire time. It's got me all pumped up, baby. Peace.